Hey everyone, it's Josh here again from salescraftmastery.com. Today I want to take some time to discuss how investment landscapes have fundamentally changed over the years. Particularly since my departure from Wall Street, one of the key reasons I made this decision is a stark realization that many firms, approximately 95% and around 30% of hedge funds, still heavily rely on outdated methods of accessing investments. They often focus on back-tested results rather than adopting a forward-thinking approach. Think about this, guys. That's like dinosaurs nowadays. Let's put this into perspective. Before 1984, the economy predominantly was based in the United States with no technology companies trading, very rarely. However, things began to shift dramatically after the rise of technology firms, Oracle in 1984. By the early 2000s, it became absolutely evident that these companies were achieving significant earnings by integrating their operations globally, with as much as 20 to 30% of their business taking place overseas. This overseas engagement provided them with much higher momentum in earnings compared to traditional firms. Keep in mind, this is when Apple was at like $14 a share. Now imagine you're an investor stepping into this landscape. You might be sitting down at your broker's office with your wife for the first time, perhaps with your spouse in your newly created 401k. The broker greets you, likely offers you a drink, cup of coffee, whatever the case is, and then presents a large pamphlet filled with this wonderful information based on a multitude of questions they've asked you about your financial goals and risk tolerance. However, here's the stitch, right? Wherever the issue arises, a staggering 95% of the projected growth in your investment portfolio is based on, I'll say this again, 95% of your growth is based on historical data that is no longer applicable. As I begin to observe this trend, I started to question the wisdom of investing in companies based solely on where they have been while failing to consider where they are headed. Guys, this is particularly pressing given that major market players like Citadel and Virtu literally account for 30% of the total trading volume in the United States market every single day. These firms are the largest market makers out there, and to be sure, their influence on market dynamics, guys, they can't be ignored. Over the past 2 decades, I've redirected my focus, my platform, to understanding market trends and economics from a more forward-looking perspective. The objective has been to make investors money, but at the same time to protect their overall returns and consistently show them how that can be done. So as an example, simply by taking forward-looking numbers, and it goes much deeper than that. You guys go down the road, you look at the gas when it's cheap and you say, oh my God, that's great. It's cheap gas. Let me stop in. Now, to illustrate my points, let's consider some things here. Oil is by far one of the best forward-looking gauges there are in the market today. When you drive past that gas station, you think of how cheap you can fill up for. When I drive past that gas station and I see lower prices, I know that something good is about to happen. But when you have 95% of every single firm on Wall Street, guys, I'm talking about big boys, Goldman Sachs, Merrill Lynch, and I don't want to name names. They could still be using them, they could not, but 95% are, so it should give you a pretty good theory of who is and who isn't, are still using backdated information to give individual investors forward guidance. You don't know where the stock is going to be next year. I sure as hell don't. But that's why I hedge my bets. Incorporated forward-looking analysis or out-of-sample validations, guys, they're effectively finding themselves chasing shadows in the data. And who does it hurt? It hurts you guys. So what does all this mean for you as the investor? The disappointing answer is that you could potentially be losing money for a very long time to come. Moreover, crucial to be aware of the additional costs that come with certain financial products. So again, putting things into perspective. Now, because it's called asset management, if you remember, instead of diversification back when I started out in the deal, it's a little bit different now, the way that FINRA guidelines have changed. According to FINRA guidelines, it's okay to charge an investor up to 5% commission. Now that's round trip, right? So you can charge 2.5 in and you can bang out a client for 2.5 on the way out. Guys, you can do bad by yourselves for free. No kidding. You could do a lot better by yourselves for free. Most people think, okay, well, I'm at work. I don't got time to focus on this shit. I will show you how. You need this thing called a plan. You need to understand it's not about you keeping up with the Joneses. Guys, come on, man. Grow a pair. You earn the money. It's your money. It's about keeping up with you. What do you guys want in your family? Sadly, I can promise you, I did the same thing with my daughter. Most parents do not sit their kids down and say, hey, Susie, Sally, Johnny, we got to have a talk about money, man. Think about that for a second. You're willing to talk about sex, drugs, everything else. But one of the most important tools, I'm definitely victim of this as well, we never sit down and explain to our children how very important it is. Guys, look, the markets have already changed. They're going to keep changing because information, yeah, it may still be the number one commodity out there, but guess what? How do we know what's good information and bad information? And if people are still using information 20 years ago, what the heck in God's name are we doing here, guys? Please, if anything, smash down that subscribe button. Please go to my website. There'll be a form from Jot Forms because I'm cheap. I don't like to spend money if I don't have to, right? So there'll be a form there and you'll get a couple of downloads. If you want, put your phone number in there and arrange for a call. It's totally free. But I want to give you guys the necessary tools in today's market so that you can adapt for the returns that you want rather than reacting on the oh shit button when the opposite happens. Happy hunting. I hope I help put some, a little bit of sugar to this and make you understand the markets a little bit better. But guys, we can do better on our own, all right? That's the bottom line, and I would love to be able to share it with you. Again, smash that subscribe button. Please hit the likes. It helps me tremendously, especially on YouTube. If you really could, I'm on YouTube, I'm on Facebook, I'm on all of them. Please, honest to God, it really does help me out a shit ton because I'm just getting started, right? So that I would ever be so grateful if you could do that. Thank you. I'll try to be on as often as I can. That is my morning market briefing, mid-morning market briefing, if you will. Basically just trying to get you involved and try to make sense to you. If I've done that, again, hit that subscribe, hit that like, and fill it out. And I give you my word, if you give me your phone number, anytime you want, I'll be more than happy to give you a call or you can give me a call. Thanks a lot. Take care. Wish you all the best.